Hey everyone, so we're going to take a dive into Bitcoin as we are starting to break down from the flag pattern that we were speaking about last week and potentially starting to put in some of those lower targets that we spoke about as well. If you like the video, go ahead and drop me a like down below, subscribe to the channel if you haven't already to keep up to date with time sensitive videos. And without further ado, let's crack on. Now, if you followed what we were talking about in our video last week, we said that down here, once we broke $40,000, the most likely scenario was some sort of test of the low 40s, which is exactly what we got. And then we basically hit this low volume area, okay, down here at about $42,500, which we typically see violent reactions from in the past. And you can see that down here in our December capitulation and back in the summer last year, and even moving back further into February 2021. So no surprise that we're getting a reaction over here to the effort for the bears to start stepping in and taking control. And then we said that we're most likely to start rolling over. That was probably our best case scenario once we broke $40,000. And as we have started to break down from this flag, the flat level that we were speaking about was $37,000, and if we break this zone over here, we're now officially creating, some lower lows on our weekly and daily time frames. And I think that we definitely come down and challenge some of these lows at that $34,000 level, which I don't think will hold because, like I said, multiple times, I didn't think that $33,000 was the low, to basically send us over to new highs, and that's, this move is looking more and more corrective. And remember, what do corrective moves do? They typically break down, and this is exactly the opposite, okay, of what we got last summer, which was a descending triangle wedge pattern. And basically at the minute we are ascending correctively in a bearish flag, and looking to break down at the minute. If we get any follow through tomorrow and start to take out 37, it will probably lead to further selling in the markets. And if you've been following me, you should be fairly well positioned in the markets, because I've been telling you that you should at least be having some cash on the side. And for me, I'm actually really, really excited about this, because if we come down to those levels that I think we're going to come down to, and it's not going to be a straight line, okay, then, this is going to represent one of the best buying opportunities that you're ever going to have. And I see two scenarios here for Bitcoin, okay, that are going to start to play out. And for me, the first most likely scenario, okay, is going to be we break down here and then retest this $30,000 level that I've marked out over here, which is a key zone. And either we're going to tap here and probably form some kind of double or triple bottom, or whatever way you want to look at it, okay? Basically, this area is strong support. We can even take out some of these lows, okay? Tap out some liquidity and then basically swing it back to the upside and move it up to about 35,000, 34,000, and basically very much frustrate everyone in the market, similar to kind of what we did back here in 2018 in this bear market, where we had our sort of pivotal key low at about 5,900, and we basically swung below it for a few days intra week in the summer in 2018 as well. And then we basically got another move up, which was a retest, I believe, of the 200-day moving average again. Yeah, perfect. And then we basically continue to hammer down at this 6,000 level, which was the floor, and then continue to break down. So I think something like that could be playing out here, where one way or another, this might set a little bit of panic. I'm not sure how this actually plays out, but I do think that 30,000 will prove to be support, at least in the short to medium term this summer. And maybe we can come up here and basically, again, roll over and create still overall structure like this of lower highs and lower lows. And basically this floor is likely going to get weaker. And maybe I think that the most likely scenario is that if we do reach somewhere between that 20 and 30k floor, which I think is, a place that we can definitely get to, then maybe we hit that later on in the year, and again basically reconsolidate this area, and potentially move lower and basically repeat history. And I would imagine that 200-day moving average as well, you can see over here that that's going to start rolling over, and probably coming in at about 42,000, 40,000. So if we see something similar to the last bear market, then come down into 30, loiter between $30,000 and $40,000 and maybe make one final push down into this area, whereas that 200 weekly moving average at about $24,000. As we're about halfway through the video, please don't forget to subscribe down below, like the video if you haven't already, to keep up to date with these time sensitive videos. So without further ado, let's crack on. Now, the second scenario is that because we have had this major consolidation over here, and remember, consolidation precedes expansion in any direction, so we've got this build up of price essentially, and we've got these key lows over here and some potential key lows over here as well at about $30,000, that if we do break down violently from here, and the move is very rapid, and we were to get to $24,000, there is the potential that we could be forming, maybe come back here and then retest some of these zones and then basically move lower and then start to form some bottoming patterns a little later in the year, that if we were to basically push down further and make that typical 80% correction that we get in bear markets, then that might lead us to about $14,000 or so, or to about $14,000 to $10,000. I'm not sure about that. For me, I would be really, really excited about that, because I would be more than happy to be buying in at about 24,000, basically anywhere between $20,000 and $30,000. And if we go any lower, then absolute bonus. You can absolutely stock up for the future and just buy all your favorite cryptos and, go from there. And the reason that I would be looking at that is, really, where is an 80% correction, which is the typical bear market standard for Bitcoin in our 4-year cycle, which is still playing out to the T, that is coming in hot at about $13,000, $14,000, okay? Now, coincidentally, I talk about order blocks a lot, okay? And then where is the last major order block, okay, that we can see? We can see that last major order block is here. It's between about $10,000 and $14,000. So there is that potential for liquidity to be, tapped in here. And, if we just take a look at what happened back in December 2018, is that we basically broke market structure over here, okay, from where we were consolidating from, and then reached that sort of euphoric short-term peak in June 2019, and then we came back down in that COVID crash. But lo and behold, where did we come back to? We came back down to the order block that we broke out from, which was exactly about $4,200, and then bang, smashed into that order block, and then off to the races we went. So let's just be aware of that as well, that this is just one massive order block. We don't need to reach the bottom of it, okay? But again, what would that form on the macro timescale is that if we did maybe hit that second scenario that I'm looking at potentially, and we tapped into here, what we're creating, look, low, higher low, potential higher low over here, okay, and then again, just on the macro, just creating higher highs, and then swinging this all the way back up to about that sort of $200,000 level. So let's keep an eye on both these my base two scenarios for this bear market. I think one of these is definitely likely to play out. Which do I think is more likely? Probably the first one, only because of the effect of diminished returns. I think that we did get a fair amount of diminished returns to the upside. Of course, we made some crazy gains and we basically went up about 20x, but we've done that like much more than that before, and we didn't go too far past the previous all-time high. So I wouldn't be surprised to see some sort of diminished returns to the downside as well. And I imagine that somewhere down here at that $24,000 level, as things start to look bearish and people start to get exhausted, and those last people who were basically calling for new highs in the bull market start to switch bearish, that might be your sentiment signal as well, that we are, potentially looking to put in some kind of bottom. But I wouldn't be waiting for $14,000, no chance. I would be loading up my monthly salary, not financial advice, only educational purposes, only anywhere between below $30,000 I think is fine, but 24,000 to about 14, 10,000, I think this is an absolutely incredible buy. But we don't want to get too far ahead of ourselves here. We're following the 4-year cycle very, very nicely. This to me is the more likely scenario, is that the bias is down, and we said this. in previous videos. So basically, let's stick to that until proven otherwise. BTC dominance chart. Just a quick word on altcoins and Bitcoin relationships. Just, you know, I'm not really holding barely any altcoins at the moment. Barely any, like really altcoin light at the minute, because in downtrends like this, if Bitcoin volatility to the downside is quite large, you can bet that the moves in the altcoins are going to be a lot sharper and a lot more drastic. And just look down your right hand side over here. You can see as Bitcoin's down about 5-6%, you've got ADA down about 7-8%, you've got Luna down nearly 10%, .NET, you know, down about 7.5%. So, you know, that's about a 50%, you know, worse off downside move or more in a lot of these altcoins. And you can see that the dominance is still, in my opinion, forming this sort of triple bottom down here. So it's telling me that, you know, that the dominance wants to move up. And if we move over here and break this 48% level, I think that this might be, you know, telling you that we're moving and testing some of these higher levels at about 58, 55, 57%, which we can definitely reach. I've seen people online say that we're never going to reach these levels, and altcoin, and this is a different market, different paradigm, yada yada yada. I've heard it all before. This time is different. You know, when you've lived through enough market cycles, you realize just don't pay attention to any of that sort of stuff. You know, I think that the dominance is telling us that it wants to push higher, and if BTC symbol dominance pushes higher, I think that that is telling you that you want to be fairly risk off with altcoins, or at least be very selective with them. Last thing that we want to be taking a look at is the DXY, and we're really in a massive parabolic phase here in the DXY, which is putting pressure on Bitcoin. You know, you've got to be paying attention to these macro these macro indicators, and if you are just ignoring these and you say that these things don't, you know, help you navigate the market, then you are just being completely delusional. We form all of the tops in and around the bottom when the DXY is bottoming, okay, and when the DXY is topping, we tend to see large moves. So we've seen this large move in the DXY. We haven't yet seen a massive move in Bitcoin to the downside yet. So I'm looking in this area, whether it's like 102, whether it's like 105, or we've got an order block up here at about $111, quite possibly we could reach here, is that I'm looking for basically this move, okay, from here where we spoke about, okay, somewhere between that $100 and $111, somewhere over here. I'm looking for Bitcoin to put in some sort of impulsive move to the downside or capitulation. If you see that whilst the DXY is, you know, moving up parabolically, then you can start to look at a potential reversion to the mean for the dollar. But the dollar is looking very strong at the moment. Don't fight the trend. The very last thing to finish up on Bitcoin is not only do we have the weekly 200 moving average at about $24,000, we've also got the monthly, okay, EMA next level below us down here at, lo and behold, $24,000 at the 34 EMA. So I think that if we make some sort of massive strong move down at $24,000, this is going to be a really key area for us to be holding. And I think that we do hold here. There's multiple reasons to suggest that you know, $24,000 is that area that we want to be keeping an eye on. So if you got some value from this, folks, please go ahead and drop me down a like below. These videos do take me a lot of time to edit. I do have a job as well as keeping you lot informed with crypto. So subscribe to the channel if you haven't already, like the video, and I will catch you lot in the next video, maybe when we're at $30,000 and I can say I told you so. Catch you next one.